Hi guys, this is Erica from Gokce Capital. Now before I begin, be sure to click subscribe and turn on the notification bell. It's that time of the year again, the time to pay property taxes. And just yesterday, upon opening a bill from San Bernardino County, I was surprised to find an unexpected $100 charge. It seems the series of recent California wildfires had spurred the need for a special assessment to fund additional fire protection services. Well, I can hardly begrudge the county a mere $100 to help assist in the urgent and life-threatening task of fighting these massive fires. However, one commercial property owner on the other side of the country had a very different reaction when he received a similar $64,000 assessment bill. A bill that he ultimately took to the New Jersey Supreme Court. But more on that later. For if you are a property owner, you will likely run into special assessment taxes at some point. So in today's video, we're going to cover the top things you should know. Number 1, special assessments are charges levied to fund local improvements. A special assessment will apply only to those properties which benefit from the project. And the projects these assessments could fund may include new roads, water and sewer lines, schools, or repairs to existing public or common infrastructure. Number 2, special assessments are often levied on new subdivisions to fund the expansion of public services when regular property tax revenue is insufficient. The special assessment will again apply only to these properties that are being covered by the new public services, and the assessment will often only last for a set number of years. Number 3, special assessment districts are created by local governments to determine the area over which the assessment will be apportioned. The special assessment district is the geographic area in which the market value is enhanced because of the public improvement done, or more directly, those properties that immediately benefit from a new service. Number 4, while many special assessments are levied by local governments, they can also be charged by a special improvement district or business improvement district. And these kinds of privately run districts are becoming more and more common. A special improvement district or business improvement district is voluntarily created by property owners within the district boundaries. And the district is run and managed by a nonprofit that is in turn controlled by local property owners. Number 5, most property owners will encounter special assessments in the context of owning a condo or a home in a homeowners association. And this is because condo and homeowners associations can also charge special assessments to fund needed improvements. And these assessments are in addition to the regular annual dues charged, and as with other forms of special assessments, will typically only last for a set period of time. Number 6, special assessments, regardless of who is levying them, are generally not deductible from federal taxes. This is because the IRS states that property tax deductions are only available if the tax is imposed uniformly on all properties in a jurisdiction. However, as with anything related to taxes, you should always consult with your accountant. Number 7, special assessments are ad valorem, meaning they are based on the assessed value of the property. Your property's assessed value is determined by the city or county assessor, but the percentage of the assessed value that will be levied as the special assessment is determined by the nonprofit or government agency that oversees the assessment district. One exception here may be special assessments charged by condo or homeowners associations, which could be flat rates or based on the square footage of the home in question. Number 8, special assessments are typically incorporated into your regular property tax bill. This is often the case when it is a government agency levying the special assessment. However, if you are in a privately run HOA, condo association, special improvement district, or business improvement district, the special assessment is often going to be incorporated into your regular dues bill. And number 9, as with property taxes, if you do not pay a special assessment, a lien can be created against your property. And in some cases, the taxing agency may eventually be able to foreclose on your property for non-payment. But let's return to our New Jersey commercial property owner and the disputed assessment. In 1994, the owners of Headquarters Plaza a downtown Morristown office complex received a special assessment of $64,317.75. This assessment came from the Morristown Partnership, the nonprofit established to run Morristown's Special Improvement District, a public-private partnership created by the state to help revitalize and redevelop the city's lackluster downtown business district. The Morristown SID funded its redevelopment efforts through special assessments that were charged to commercial properties based on their assessed value. What this meant, of course, was that the larger, more valuable properties paid higher assessments than smaller mom-and-pop shops. Headquarters Plaza, being one of the larger property owners, challenged its assessment, stating that it was unfair and, more importantly, unconstitutional because special assessments were not levied against residential properties. Headquarters Plaza argued that the special assessment was in fact a tax and thus unlawful, since in New Jersey, all real estate property taxes must be applied across all classes of real property. In the end, the state Supreme Court ruled that the assessment was in fact an assessment and not a tax. Thus, residential properties could rationally be excluded since the assessment was designed primarily to help improve businesses. The ruling was a huge win for the Morristown Special Improvement District, but also for special improvement districts across the state. Yet this ruling doesn't solve all of the thorny debates that these kinds of districts pose. Many activists, academics, and practitioners have argued that these organizations effectively privatize public space. But either way, love them or hate them, special assessments are here to stay. So what do you think? Are special assessments a benefit or a burden? Let us know in the comments. Did you like this video? You're going to love our Gokce Land Due Diligence program. We'll make you a land due diligence expert in just 7 days. Check it out at gokcecapital.com/glad. And while you're at our website, don't forget to explore our $1 down listings at gokcecapital.com/listings. Finally, don't hesitate to reach out. You can email, call, or text, and we will respond as soon as possible. So thank you for listening, and more to come.